I want to be in gold. I want to be in silver. I want to be in Bitcoin. I bought some Bitcoin. I bought Ethereum because I think tokenization reality is going to start to set in the summertime. I don't think enough people are talking about tokenization and what's happening and what they've basically announced to start in July. Do you use AI? What's your view on it? Do you think agents are going to be in here? Just ask them the questions, because at least when I have this conversation, I'm selling DRAM not because I have any negative thoughts about where AI is, but because the DRAM thing bothers me in terms of how much money has moved into it. The fact that SK Hynix has a 2 times ETF in Hong Kong that is like one of the biggest in the Hong Kong market. That just means I think everyone's in it. And my guess is that over the next 6 months, private credit not coming back, private equity not coming back, VC not coming back, SaaS not coming back. You guys can all do what you want. You can try to pick these things. There's a reason why the ultimate long duration asset, bonds, are uninvestable. These things are not investable in a world where speed is the game. They're under pressure for valid reasons, because what AI has done is made people realize that they don't know what the world's going to look like in 3 years. So why would you make any long duration? This happened. So corporate credit.
The point Jordi is making is simple but powerful. The physical backbone of the AI revolution is being built with components the US doesn't produce domestically. The trade imbalance isn't a policy failure. It's a structural reflection of where the supply chains are. On the export side, American energy, particularly with Iranian supply constrained, is balancing some of this out. But make no mistake, the United States is a net importer of the technology stack that AI runs on, and that has profound implications for global capital flows, currency dynamics, and which equity markets deserve a closer look. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
We have huge imports of technology stuff coming in for the AI trade, huge numbers. I mean, so people understand, for DRAM, you're basically talking about Samsung, SK Hynix, and Micron. Those are your 3 major choices, and 2 of them, yes, are in the Korean market. On the flip side, to balance out the trade, we're a huge exporter of energy, especially now with Iran. So that's what's kind of balanced out. We have tremendous, enormous imports coming in related to the data center build out and all the things we need for compute. And it's not just that, it's things for phones, it's things for computers, everything that's AI related. We're getting a lot of it from overseas. And I don't want people to think about that this is just related to DRAM. It's a lot more things. NVIDIA is doing deals throughout Korea for heavy electronics. I mean, they're rolling out Vera Rubin, they're still rolling out Blackwell, and that brings a lot of needs on the power side that we just don't have here. At the same point, if you need gas turbines, 2 of the major companies, Siemens and Mitsubishi, they're outside. Japan has a huge export side that's to the US too. So there's a lot of companies that if people are looking to get concentrated risk. So remember, as much as I want to say, oh yeah, we need access to these, well, you can get access to them in the Korean ETF. They want concentrated access to DRAM. And to be honest with you, I've called this benchmark arbitrage. If you're an RIA, if you're a mutual fund, if you're a pension fund, they're all benchmarked. And right now the benchmarks are wrong. So the other angle of supersonic tsunami is it creates these parabolas because the dollars flowing in are enormous. I'll keep saying it every time. Jensen Huang has said to everyone, the build-out's going to be 90 trillion over the next decade. Like, those are massive numbers, and it's basically a rotation. We're getting rid and we're allowing every old car that doesn't have AI in it to be gone, and we'll be replacing it with a new car that's AI. It'll take a decade for all of those cars to recycle. Same thing will happen with appliances. Same thing will happen with phones. Same thing will happen with computers. It won't happen in 1 year. It'll happen spread out over a while. The data centers, it takes a long time to build the data centers. So everyone that's kind of caught in this thinking, okay, it's not there. I'm going to bring it up again and again because I'm sick of reading these self-absorbed people who believe I've seen bubbles. I know what they look like. This is a bubble. Yes, this looks like a bubble. And just like everyone who went to college has that alcohol they don't drink anymore because it brings back that bad memory. Parabolas bring back bad memories to people. And so you hear the phrase, I've seen this before. Retail doesn't know what this is. This is a bubble. This is tulips. I think people have to just deal with this is a structural thing. And instead of having crashes where everyone loses their job and it takes 4 years to go back to highs, that allows every smart person to buy things at value when the people that are dependent on credit have to sell their stuff. This is a different retail situation. Anyone who wants a job can get a job. It may not be the job you want, but you can get a job. If you can get a job, that means you still have income coming in the door. Okay, that means you can still make your payments, you can still go through this, but you're living paycheck to paycheck. That is very different than losing 4 million jobs in a year and you can't spend any money and now you're in a different situation. These are all different, and instead of having crashes that last a long time, we had a crash last year, lasted for weeks. We had a 10% fall this year. It lasted for a little bit of time. We had plenty of stocks that fell 30, 40, 50%. We still have a lot of names that have fallen a lot. Maybe we're not having the crashes we had in the past. Maybe these are just speed crashes.
When leverage products emerge around a single semiconductor name in an emerging market exchange, that's a sentiment indicator. The retail trade has found the thesis. And when retail piles in, the easy money has often already been made. Micron still trades at 6 times next year's earnings with projected earnings growth of 60% or more. By any rational valuation framework, including a basic P/E ratio comparison to NVIDIA at 24x, Micron is extraordinarily cheap.
The difference between younger people and let's say people in their 50s and 60s, there's a reason why they had to speed up baseball. They had to put a clock on the pitcher, okay? There's a reason why all of a sudden football inside or the football scores are now in the 50s regularly. There's a reason why when you say today's news, like they forget about what's happening and move on to the next.
Remember story. Maduro?
Yeah, and that's what I mean. It's like TikTok is the right length for a video. Like attention deficit disorder, which is something that I absolutely.
Yeah, me and you.
Yeah, as a kid.
Are we the ADD boys?
Yeah, so I was put into emerging markets. It was the perfect place for me.
Interesting.
Bull market. Oh, next day, bear market. Oh, world's going to end. And so I traded my way through emerging markets. So there's the reason why my daughter said, okay, you are the world's oldest millennial. You've acted, you move on. It's the reason why I got involved with, when I got to Morgan Stanley, trust me, to move to the level I did in the time that I did, as the son of a construction worker who went to Manhattan College and graduated. I mean, I was not young when I graduated college. Like this was not a thing for me. But to move up to the ladder, part of it was I didn't have anything to lose. Mm-hmm. And I think that is one of the things that separates retail from, again, this self-absorbed pontificators in X that say this is a bubble, that say everyone's going to lose all their money. We'll have falls of 20, 30%. I'm guaranteeing you that at some point I've gotten rid of 2/3 of my Micron. So everyone who's been involved watching this show since I first mentioned Micron, 2/3 of it is now gone.
You sold, just so we're clear, we always talk about things that people are buying, but you sold 2/3 of your Micron watch.
This week. It's already higher than, as of this morning when we did this, it's already higher than it was when I sold it. So I'm not like making some call that this went down and it's going down. The reason I sold out of it is not because I think it's coming down. Do I think it might fall 20, 30%? Yeah. To be honest with you, if it did, I would probably buy it again because it is way too cheap for the view that I have. So when people sit there and say, this stuff is going to fall, just ask them one question. What is your view on AI over the next 5 years? Instead of telling me that this poll is going to fall, do you use AI? What's your view on it? Do you think agents are going to be in here? Just ask them the questions, because at least when I have this conversation, I'm selling DRAM not because I have any negative thoughts about where AI is, but because the DRAM thing bothers me in terms of how much money has moved into it. The fact that SK Hynix has a 2 times ETF in Hong Kong that is like one of the biggest in the Hong Kong market. That just means I think everyone's in it. And my guess is that over the next 6 months, it's probably higher. It could be lower. But if I had to guess, I'd say it's somewhere around where it is now. So where did I put my money if I sold it? Well, that went into silver, which has fallen significantly. And to me, is starting to go into the next regime. So the regime I've talked about and the way that I move my money is I think we're entering a new regime within AI. So AI is going to have cycles. At some point, instead of recessions and crashes, you know what we're going to run into is bottlenecks. And when the bottlenecks happen, the volume of sales might actually come down for an earnings period. And that's what I think may happen is maybe the first quarter, this massive earnings we've seen is the hoarding that happened with inside hardware and semis. And that once they get it, they have to wait for the data centers to be built, which is taking longer than expected. And they're not using it as much. Will they continue to buy it? I'm not really sure. DRAM prices did peak. So I'm making a rational argument for me that it does feel like too much retail might be in here now, and that they're going to move their attention to something else, which is where I think inflation is going to be, and real rates are going to be stuck at, again, negative levels. We'll have inflation above rates. If I'm right about that, I want to be in gold. I want to be in silver. I want to be in Bitcoin. I bought some Bitcoin. I bought Ethereum because I think tokenization reality is going to start to set in the summertime. I don't think enough people are talking about tokenization and what's happening and what they've basically announced to start in July. AI agents are with us. They need food, and that food is not physical food. It is tokens. There's been a shortage. That's what's worked. I think now we're going to run into a supply-demand issue, and that's going to be about more inflation than what people expected. And if that's the case, I don't want to be in semis as much as I want to be in power.
In this environment, real assets and hard money win. Gold, silver, and Bitcoin are Jordi's preferred positions. He also bought Ethereum, specifically because of tokenization. Starting this summer, real-world asset tokenization is beginning to move from pilot to implementation. Tokenization of private equity, real estate, and credit could unlock trillions in dormant illiquid capital and bring it into price-discoverable markets. Jordi sees this as the next major narrative, one that most investors are still not pricing in.
I mean, the good thing is Bitcoin bottomed at 60,000. It's now at 80. I can do math fairly well. It's 33% move to you and me. That's a big move. That's better than the stock market. So we'll leave that alone. Here's what I think is important news for people to recognize. The BlackRock ETF, shares outstanding, all-time highs. All-time highs. So it's higher than when it was 126,000. That means that in a what is considered a bear market to most people, most podcasts I listen to in crypto, it's amazing how much this 4-year cycle, like it'll never die. We're in the middle of the 4-year cycle. It's not going to end until the end of the year. And I'm like, oh my God, I got to listen to this forever. Whatever the case is. It's like the boogeyman's around. Yeah, it's the 4-year cycle. Well, the boomers, because that's what the BlackRock ETF is, the boomers, okay? The wealth managers, Morgan Stanley creates, I mean, if you
Morgan Stanley's over 200 million in like 2 weeks.
And if you go through where we were at the beginning, like the boomers are buying it. They're adding it to asset allocation. So my whole story about this IPO type thing where the OGs are getting out and they're transferring ownership to the boomers. If they're buying during a down move, I just want to let people know when this thing goes higher, they will be buying in an up move.
Of course.
No question. So they're in.
Oh, they chase too? They're not disciplined?
Yeah, no, they're, well, here's the thing. And again, I'll say it again and again and again and again. The growth asset bucket has died. Private credit not coming back. Private equity not coming back. VC not coming back. SaaS not coming back. You guys can all do what you want. You can try to pick these things. There's a reason why the ultimate long duration asset, bonds, are uninvestable. These things are not investable in a world where speed is the game. They're under pressure for valid reasons because what AI has done is made people realize that they don't know what the world's going to look like in 3 years. So why would you make any long duration? This happened. So corporate credit, the reason we don't have recessions anymore is because we lost the credit angle of this, meaning we used to have this contagion that happened because the winners of the prior cycle would have lots of debt. So if you go back to the great financial crisis, who had all the debt? Well, it was people doing the loans on the housing. Before that, if you go to 2000, it was the dot-com bubble. Well, the period we just went through, the Mag 7 had no debt. Now they're accumulating debt. The debt is for AI. If we were going to have a recession, yeah, it would make sense if these companies didn't have the demand and they didn't have receivables of $1.3 trillion sitting there. They need data centers to get the money. So we don't have that. But with innovation and with AI, you also don't need people anymore to start a business. You don't need debt or people. So we're at the ultimate point of like, what happens to the capital structure? So all people that are like, you know what? I think this company is going to make it in 10 years. I'm going to give them money. I'm a VC. I'm going to give them a lot of money. That's not happening. Not for 10 years. Now, can people find an Anthropic? Yeah. Can they find a Cursor? Yeah. And Cursor, you know, went from a zero to what, 50, 60 billion from XAI. There will be those out there. The question is, how much of that company did VC own when it went through there, and how much was actually owned by the owners? So I just think we've disrupted the whole thing. You see a lot of people talking about terminal value. Goldman Sachs wrote a whole thing on terminal value. I just think for people that are long-term investors, we're entering a period where transparency and liquidity is becoming critical because a lot of money is stuck in dormant assets. So tokenization is actually needed, if for no other reason, for price discovery for a lot of these things that they're trapped in. I've mentioned Joseph Schumpeter on here, and I believe that this is the reason why I created a paywall for people. The nicest messages I get from people are how I'm helping them with embracing AI, trying different things, giving some of the tips that I think are important for you to stay ahead of things so you can get a job. Because if you do know how to use artificial intelligence, you will be able to get a job.
100%.
There's no question about it. At the same time, being involved in the stock market, I really do think if you're really smart about the way you deal with things and you follow this decade-long $90 trillion that's going in the market, and you recognize that a lot of these companies are just not priced properly for that going on, you can have some periods where you don't make money, where we have one of those speed crashes where the market falls and DRAM prices fall, whatever, 20, 30%. That is going to happen. But you shouldn't care about the 20 to 30%, and you shouldn't have a long-term memory, and you should be moving into the stuff that is the new story to go in. So I do think you have to adapt to the environment you're in. The very positive side, and again, to use Micron as an example, Micron is trading at 6 times next year's earnings with the growth rate, let's assume the smallest it'll be is 60%. NVIDIA's earnings are growing at 70% a year. Their multiple is 24. So PEG ratio, I mean, you don't get these kinds of opportunities to have a company that's growing their earnings at 50, 70% and still have a multiple. Think about where it'd be pricing as a startup business. So the reason it's there, and the only reason it's there, and I will tell you this is a fact from, I talk to, let's assume, a couple hundred hedge funds a year, and between mutual funds, pension funds, let's assume that the total amount of institutional people I talk to in a year is a few hundred. They've missed the trade. That's it. Like the majority, I've not heard people say they made it. Now, do I know some of them that are in? Yes, it's not 0 and 300. Well, let's assume 100 of them, a third of them have been in semiconductors at a reasonable price. The majority can't buy it at these levels. They're waiting for a pullback or a recession. So I just think people should realize that the reason these things, in my opinion, are still so cheap is because institutions just won't buy them at these levels. And if they do, they're just buying small amounts.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.